Indian firms are looking at a record amount overseas debt raising this year. And sources tell ET now that Tata Motors, the stock that we just spoke about, is also looking to raise money in the Singapore market. Anirudh has exclusive details and he joins us right now. So Anirudh, first question, how much is Tata Motors planning to raise and why?
You know, sources are telling us that they're looking at raising close to 300 to 400 million Singapore dollars through this Singapore dollar route. And of course, as you know, we've been seeing the company really go through a slightly bad phase on their domestic business. You know, their volumes have been down in the dumps of late. And of course, we've seen their overseas subsidiary, which is of course Jaguar Land Rover, that's been doing really well for them. And they have a huge capex planned out in China as well. So of course, they're raising a lot of money overseas. And the Singapore bond is of course one of the first few tranches that they're looking at. Of course, remember that Tata Steel, of course, also had raised close to $1,500 million from the Singapore bond market a few weeks back. So clearly, it's been giving them a lot of confidence, and of course, they're going to be using this money for their overseas expansion. And one can easily assume that this money, which is raised overseas, would possibly go in to the capex plans of their JLR unit overseas.
Anirudh, also we have been seeing a few Indian corporates look at Singapore and Australian markets, as you just mentioned an example as well, in order to raise debt. What's the reason for this trend arising?
Well, if you look at the Singapore market, it's basically one of the most active markets at this point of time. And of course, bond market sources have been telling us that the Singapore market is one which has a huge amount of liquidity. So a lot of companies, not just Indian companies, but also US and European companies have been doing bond issues over there. So clearly, we've been seeing a lot of activity in the Singapore bond market. And also, of course, a few merchant banking sources have been telling us that they've been advising some of their clients who have overseas funding requirements to go ahead and raise funds in a few markets like the Singapore market, like the Australian bond market, and also in the Chinese, in the mainland China market. So clearly, these three markets are very much in vogue. Of course, the bulk of their overseas funding requirements are going to be, satisfied by the US dollar market. But clearly, these few options will give them a good, an option for them to diversify their funding base. And of course, it is going to work out cheaper for them, given the fact that our corporate bond market in India at this point of time are seeing rates as high as 10 to 11%.